So we'll get to see some cotton coming online. I just what the cotton world needs, we need, actually, I will say it this way, I may be wrong, you guys debate it, we need more mid-south, southeast type cotton. I'm not taking a swing at Texas at all, but the market is going to need some more machine harvested cotton. That's what we're getting short of. We've talked, we wrote an article for the ICAC in December saying, well, just wait and see, watch it and see. You're going to see that world production is going to be lower than world carryover this year. At world consumption, we're going to take world carryover down again this year. At the time, USDA had it going up a couple of million bales, but we're going to take it down. That's going to continue to support the market. So you guys, again, Joe, make trucking comments. I personally want to hear your market comments because you're also an expert in that area, and because I happened to get a little bit of clue about trucking a couple of weeks ago from one of your counterparts, not one of your employees, one of your counterparts. So I picked up on trucking kind of early, not as early as you did, obviously, but yeah, you three guys go ahead. Gerald, you go ahead first and make your comments. And again, any of you just jump in and join us anytime, please. Gerald, what do you think?
You're making comments about the crop size and USDA, and very rarely, they typically come out with an estimate in January, and then they generally don't make a revision to that estimate until they come out with their final numbers in May. But I think I would agree with you that I don't know why they can't come out with some revised crop estimates as the year is moving along. Particularly with so much left to gin out in West Texas. I think people really would like to know that. I'm not sure where to go from here, OA. You were sort of all over the place. So I'm not sure.
Really?
I'm not sure where to pick up from.
The question Pat asked a lot, I'll ask it this way. Where are we going with new crop? What's going to happen? I have said that we had to have some new fundamentals come in to get us above 78 cents. Maybe the new fundamental is a trucking issue. Maybe the new fundamental is the moisture in Texas versus the lack of moisture in Texas. I think world consumption still goes higher, but what's the new? That's what has us at 77 cents, 78 cents, 76 cents. What's going to take us, what's going to have to happen to see new crop get above 76, 77 cents?
Well, we're above 77 right now. We threatened 78 the other day, got up to 77.50. I don't know what the high has been today, but I think it's going to make a run, try to make a run for 80 cents. I mean, as long as we can keep current crop into the mid to low 80s, I think December's got a chance to run up there close to 80 cents, particularly if it continues to stay dry in West Texas. Hot and dry in West Texas, it doesn't matter how many acres get planted out there this next year. If you don't have any rain, nothing's coming up anyway. So as long as you continue to stay dry in West Texas, there has been some moisture fallen. Most of the moisture has fallen, I guess, east of Lubbock so far. But you're going to need it on the high plains, north of Lubbock and west of Lubbock to really make a big crop this next year. But, we've got until May. Typically West Texas doesn't see any big rains until the May time period, late May, early June. So I think but I do think that's what'll drag December up to close to 80 cents.
Okay, we hear a lot about the drought there in West Texas, but I would say, and then in the rolling plains, but I would say at this stage it's not nearly as bad as it was in 2013. Kip, then I'll come to you, Joe. What do you see? What's it going to take to get the new crop to 78 cents to 80 cents, or can we do it? What will it take to do it?
Well, you touched on those, and I think a lot of the things you talked about is right. We're in a scenario where the weather will have a big impact on it. I think that's the major thing now. We've seen great demand for U.S. cotton, though. There's a demand out there for U.S. cotton. I think if that continues the rates we've seen now, that's going to provide underlying support to not only current crop but new crop as well. So I think and we've got the shipping to deal with and so on. But I think right now it's a weather factor. We're looking at a little larger area than many others are for the. Actually, we're just about 100,000 bale area. 100,000 acres above USDA's number at the forum. that number is, it's up to a lot of change. We could actually, with continued dry weather in Texas, increase the area simply because if we don't get the rains, we might actually get folks to plant for insurance. We've seen that a couple of times before. It's not huge. We're not going to get 1 million acres addition, but we may get a little bit more in that to what we're thinking now, just for that very reason.
Okay, Joe, I'm going to ask you to do that, make those same comments of comparison. But before you do, did I interrupt? Excuse me.
No.
Okay.
What I was going to say is when we do go to Joe, I know that when I ask him to come down here, he's got a kind of a full slate, and I'd like for Joe, if you've got, rather than just go topic by topic, if you don't mind, to look more like a guest speaker and just and provide us with your insights. Thank you.
Okay, I'm going to ask you to do one thing as you do that. You're a merchant. Of course, that makes you a bad guy with growers. I'm a grower. Of course, that makes you a bad guy with me. That we've got this mix in the industry, and Joe is. I say that what I said was very jokingly, but your comments, as I understand them, I want to say I agree with you. We've got to do something to get the cotton out of the warehouses. Now, understand the warehouse gets revenue. Growers own warehouses. Growers get more revenue by holding that cotton in the warehouse. But folks, it's a two-edged sword. If the longer we keep that cotton in the warehouse, denying it to the market, that's giving another country the incentive to increase their acreage next year, to increase something, to increase their production, causes us long-term to lose markets. So we've got to find that mix to get the cotton out of the warehouse. Joe, take off, please.
Well, thanks. It's nice to be with our roundtable New York guys here for a little bit. It's a little strange to be here in Memphis as opposed to New York, but always a pleasure to be with you. You asked the question, I think, just a little bit, what's it going to take to get to 78 cents or whatever? I'm going to say it's going to take about 2 weeks. So that's my answer. If you wanted to, you're asking about the changing from the report. The government has actually moved the Jennings report data up, so they do have the flexibility now, I think, to change the crop come this report, should they so choose to. Where you were right before, they used to wait till the final Jennings number came out in May before they make that provision. But I think last year even they made the change where it was. So I think there's the possibility that they'll be able to do that. When I look at the cotton industry and where we are today, we have some really big challenges. We just spoke for an hour in the other room and talked about one of those challenges, which is our ability to ship the cotton. And as I said there, even though you jokingly said, well, one's a producer, one's a merchant, someone else is there, but we're all in this together.
That's right.
We are your sales force. We are your marketing team. We are your customer service. And it doesn't do any good for you to grow it if we can't sell it, and it doesn't do us any good to sell it if we can't ship it. So we have got to get rid of this bottleneck at the warehouse. We have got to make sure that people realize that getting a warehouse rebate check does not mean you're making more money, because the price of cotton is the price of cotton. And so the more charges there, the more deductions you are getting. You're just not seeing it. And when your warehouse is 100 days behind, we deduct you from months of storage when we give you a bid. That's just the bottom line to how it goes. You're not getting any more money. You're just swapping it out of one pocket to another. And as you said, we're losing market share to other people. We went through, we showed how India takes all of the business the first 4 months of the year. It's the highest price usually, highest basis, first 4 months. We have millions of bales in a warehouse and we give our market share up to India. We've got to stop that. The time has come when the growth going forward, talked about USDA's 10-year projections, got world exports going from 38 million to 57 million, almost a 20 million bale increase in world exports. Somebody's going to get that. Someone's going to win that share of the pie. And it might as well be the United States. We have the capacity to grow it. We just have to be willing to ship it, give our customers what we need. I know we talked a little bit about exports this year. Government feels the challenge of our inability to ship, cut our exports to 14.5. Personally, we think they're going to be well over 16, not 15. We think we're going over 16. And next year, we think we're going over 17. The demand is there. All we have to do is execute it. And if we miss that number, we actually think it's probably closer to 16.3 to 16.4, actually. If we miss it, it's going to be because we're shipping 400 to 500,000 bales a week come the end of July, early August, and it's just going to flow over. So we think if we miss it, it's just going to be a matter of the calendar, not a matter of the quantity of the bales, and it'll just push up next year's exports to go. As far as pricing goes, grains have moved up quite a bit in the back of the drought in Argentina. Beans, new crop beans at 10.35. We thought we'd start to lose cotton acres as we started to move above 10.25. And as we start to get corn at $4 on the board, especially with some high bases in the southeast. So I know the National Cotton Council had fairly flat estimates for the Delta Southeast. We would kind of concur with that, especially when people have seen the benefits of rotation that they have on their farms for the yield enhancements that come after the fact. It would be hard to argue for someone to pass up those rotational benefits because any one of these prices is better than the other, looking at since the rallies happened on the grain side of things. Production next year. Whew. You mentioned the dryness in 2013. We know what we had last year, so we did the math. If we have a year using the exact same abandonments and yields of 2013 across the entire United States, not just in Texas, plug in National Cotton Council's area and yield projections, you get a crop of 16 million. And if you plug in last year's abandonment and yield with their acreage number, you get a crop of 22 million. So we've, in the last 4 years, so these are not like outlandish ideas, we've just experienced them both. You have a crop difference of 6 million, which is only the difference of about 40 to 50 cents. So, as you look forward to new crop, the answer is it's all about the weather now for real. We don't really we may have some really deep subsoil moisture in West Texas, but we don't have we have no topsoil moisture, and the intermediate subsoil moisture is not there. So I don't see how prices are going to go down much until it rains in West Texas. The risks are just too skewed to the upside that if we have problems there, and that doesn't matter. We're not even mentioning if we still have continued problems of pink bollworm in India or Pakistan, or if we have a problem with the monsoon or other things that can take place. It's a lot harder to finish the crop than it is to kill it at the beginning. So, which is typically why risks rise early in the year, why volatility rises early in the year, and I think we're in for some volatility. Not to mention what's going on with us around the world and in our country from day to day. But the production possibilities are so wide, I think the volatility is going to increase here going forward. I agree with you to the extent that we got good insurance rates. We got a good program coming up in the Farm Bill that the National Cotton Council has been able to get pushed through from where it is. I think that's a huge benefit to the industry, but it doesn't mean you have to plant cotton. We can move your base around and you'll get the benefits of that even if you're going through your normal rotations. So I'm really, focused on our ability to try to export this crop and next year's crop. Sales are fantastic. I expect them to continue to be fantastic. Next year's fantastic. People want our cotton. We've got to control contamination. We've got to take care of that plastic problem that's there. It is becoming a problem in the industry. We're losing our status of being, non-contamination cotton that's around. They used to give us a benefit. Other countries are catching up. West Africa, Brazil, we used to have 6-cent premiums over them. Today they're at par with us. So we're in a battle, but it's a battle that I think we can win. If we can get this cotton moved, we can sell it. People want U.S. cotton. That's the good news. So I'm long-term optimistic about the demand base. I wish I was as optimistic about the forecast for rain.
Yeah.
Joe, what are your thoughts on old crop prices?
I think old crop prices are going to follow our ability to ship this crop. We think that they carry out substantially below the 6 million that the government's there, and I think in reality the marketplace is telling you that, because if we really had a 6 million bale carry out, the marketplace wouldn't be at 82 cents, right? But we also have to deal with another phenomenon. We have 3.5 million bales of low mite cotton in West Texas, right? That's 3.5 million bales of non-deliverable, non-traditional grades that we have. Now, it's a double-edged sword, right? It means you have less of those traditional grades available. But we've also been able to make additional sales because we now have discounted cotton that we used to not be able to make. That now we can take that share that we used to lose to low-grade Indian or Pakistan cotton that would come out, or off grades from other parts of the world. we are able to sell some of the low mics and be competitive. So that's another reason why I'm pretty optimistic about our export pace and our ability to sell the cotton, because now we have a complete array of all different cottons, whether it be for spinning, open end, whether it be for weaving, other things that are there to provide all the customers of the world there. And we're going to have, in our carrot, we're going to have some low mic, but I think that's a positive thing, because that means our ability to continue to service all the customers as we go through the fall and early winter. We're going to have a full array of bales to go out. So when it comes to old crop, I think it's all about our shipment pace.
Joe, you mentioned that you were about 16 million for the current crop for exports. USDA is at 14.5. Our company's about a million more. You're a million more than we are. What is it that you see out there that is going to be able to help us get this through this trucking problem, which is primary combination warehouse and trucking? Do you see something out there? Most people are not seeing it as optimistically as you are.
Yeah, I don't have very good insight into the trucking side of the solution. I know that they're trying to look potentially at some waivers for agricultural products to try to ease it in the short term that are there. I think people are getting a little bit creative on some of their routing and the ability to get the cotton moved. But a lot more cotton's moving than you think.
Okay.
You know, there's another problem that's existing in the world today, that people are behind on documentation, where it's long getting bill of ladings. There are other things that are there. There's cotton moving. And I think the system is just about at the point where it's going to start to catch up, and we're going to start to see things to improve.
Okay.
It's going to be a challenge, because it's going to continue to go forward, but I'm hopeful.
So you're saying that USDA hasn't captured correctly all the stuff that's been shipped, or
I think
companies haven't been able to report it accurately because this disarray in the...
I think it's all coming so quick now that everybody's behind. I mean, the shipping lines are behind, the truckings are behind, the warehousing is behind, but the demand is there. Sales are there, the shipments are, as they said, you can see it on the BMAS report. You can see how many bales are being tried to be shipped. But bales, also, if you just look at the bales shipped, the bales being picked up, it's huge. Those bales are moving somewhere. They got picked up. They're moving.
Yeah, I noticed that in the last report. I think it's 460,000 bales were picked up, and it didn't show up on the export sales report. So, you know, we got 150,000 sloshing around there somewhere. that we can't-
I know, for example, this week we shipped twice as much as we shipped last week to where things are. And the projections going forward are big going forward as well. Now, I'm sure we're going to have problems, or we're going to miss dates, pick up things, and that's a problem we're going to have to deal with. But it's coming.
Thank you.
Any other comments about anything? I've got some questions. These come from farmers, and here's one. Anyone can answer this question. Trade sanctions. In the news lately, we have talk of possible trade sanctions against China for steel and aluminum dumping, and that brings to mind the question of any retaliation against the U.S., and one way could possibly be with ag exports. Any thoughts on that, Joe? Anyone?
Possible. You know, we don't want to see that. I would hope that agriculture will be able to be kept on the outside to where things are. But at the end of the day, you know, you got to be a little bit careful using food yourself to deny yourself food as a weapon. Now, cotton may be a little bit different, but look, China's going to use cotton. And if they want to buy less of ours and buy more Australian, buy more Indian, buy more Brazilian, they can. But then those countries have less to ship to someone else. So it's a zero-sum game. So we'll increase our exports to other places if they don't want it. So China's a very good customer of ours, you know, and I think they're going to become even a bigger customer of ours as they whittle down their strategic reserve. They like our cotton. Our cotton spins well for them. It's the right qualities of things that there. So it's a very good relationship that we have on the commercial side, so to speak. I hope the political side doesn't get into the way for cotton into China. But if it does, I think we're just going to rearrange the chairs on the Titanic, so to speak.
Right. I want to cover something you did. I think you're 100% right on that. If we get trade sanctions, all you do is change the trade pattern.
Right.
More is imported in Vietnam, and they import our bales in the form of yarn. And so you like you say, you rearrange, I don't know about the Titanic, but you rearrange the deck chairs. but you do, in fact, change those flows. There's never really in history, these kind of trade things have never worked out the way they were supposed to politically. And so all you really do is change things around. It makes it more difficult to do business for a period of time, but then you rearrange things and it finally starts back. So my thoughts on that. And I think that was a good point.
You know, Pat, we're talking about NAFTA and Mexico, and also Mexico says, well, they're not going to buy the grains from the U.S. that they've been buying. Well, as just Joe mentioned, it's a zero-sum game. Somebody's going to buy the grains, particularly. They're food. Somebody's going to buy it. If Mexico doesn't buy it and they buy from Brazil instead of us, we'll sell our grains somewhere, just as we'll sell our cotton.
Well, wait, if a farmer asks you, what should I be doing for this next year as far as marketing my crop, what would you tell them?
Well, as Joe said, wait 2 weeks and you'll be able to sell it for a higher price.
There you go.
Marketing my crop for this year's crop, we're working on the high 80s, and I don't know from there. Listen to these export numbers, we get them up to, I thought I was high earlier, and people were taking shots at me, and I'm tickled to death to see Joe even higher. So we're in a bull market. We're in let's call it this, we're in a demand market. And when we have demand, prices go higher. I don't know. Lord, a year ago I thought 75 cents on this year would be out of sight, and I think we all did. We thought it'd be absolutely the highest, and here we are 13, 14, 15 cents higher than that. And the scenario that Joe very accurately, very pleasantly presented, we could have a crop that's 22 million bales, we could have a crop, or 20 million bales, we could have a crop that's 16 million bales on this new crop. And that gives you a variation of, 80% in price, huge variation of what it could be. So, here we are at 78 cents. Okay, we're in the upper 2/3 of the price range. There's nothing wrong with making some selling at 78 cents. You get the May range, you get the Cinco de Mayo in South Texas, you get the Memorial Day rains in West Texas. Then we'll be talking about 70 cents, and who knows, we may be even down to 69 cents. But it's hard for me to get below 70 cents anyway, but probably even not that. Well, yeah, I can get below 70 cents if we get to all of a sudden end up with a 22 million bale crop. But the key that Joe mentioned is demand, 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 demand. Thank you, Pat.
All right, any other comments? Kip, you got anything you'd like to say?
I mean, I would just be repeating the same thing we just heard. I do think demand's really the factor that will keep the prices from going to what you would see in a traditional supply-demand sheet that says, okay, if you increase your ending stocks, prices automatically go down. But I will say, if we don't figure out a way to get this cotton out this year, I don't think prices are going to stay at these levels. We're going to go down. Prices will move lower if we can't get this cotton out.
There seems to be some, now I don't follow yarn prices real closely. In fact, the only thing I really do is look at Kotluk's yarn index. But there seems to be a ceiling it keeps bumping up against. So, I think that's going to keep prices from going a lot higher because there just doesn't seem to be any upward momentum on yarn prices.
Joe didn't say this. I'm not saying he said it. I inferred from what he said, and I think probably a lot of us did too. We're talking about carryover today instead of USDA's 6.0 million bales. We're talking about carryover at 4 million bales or 3.6 million bales. So that says a market is there.
And I get the general feeling globally that cotton consumption has weathered the storm and that we're getting some traction again.
Yes.
And that's really good news. We've gotten traction in China. We're getting traction a little bit in some other places. I think we're getting a little bit more focus on the sustainability issue of cotton, as well as the ability for it to be more environmentally friendly than originally portrayed, especially in its biodegradableness that exists, and in fashion as well. So, and we've even seen finally a switch and a change on the weight of fabrics. They've been getting lighter and lighter and lighter, so as we've been making the same amount or more pieces of apparel, we're not adding actually poundage of usage, but that seems to have changed too, and it's slowly moved back. All these things are positive for cotton usage around the globe, and so we're almost back to trend line usage after 8 years of being below the line, and that's probably the best news of all.
All right. Well, Well, very good. I want to thank everyone. Thank you, Kip. Thanks for leading us today, and Gerald, and thanks to Joe for being our special guest. We want to also thank all of you, our viewers, and our sponsor. We are very appreciative of Certified Fiber Max, and look forward to continuing to offer you this service that we do from the Ag Market Network. And that's it. Thanks for being with us.
Thank you, Pat.
Thank you.
Well, if you got a 6 million bale range for U.S., must be 18 million for the